Hello and welcome. Today let's talk about presumptive taxation scheme. But before we begin, profit as we all know is income as reduced by expenses, and we pay income tax on profits so computed. But in presumptive taxation scheme, this conventional profit computation approach is not followed. Instead, a certain percentage or a fixed value would be deemed as profit for the year. And this is the minimum profit on which you are required to pay income tax. There are different presumptive taxation schemes for different persons. For professionals, under section 44 ADA of the Income Tax Act, for businesses under section 44 AD, for goods transport operators under section 44 AE, and so on. In this video, we are going to discuss about the presumptive taxation scheme for businesses. First, let's see who can opt for it. Then, how is the profit computed? Are there any deductions that you can avail? And what are the benefits if you opt for this presumptive taxation scheme? So, let's see who can opt for it. To opt for this presumptive taxation scheme, you need to satisfy three conditions. First, you need to be a resident individual or a resident HUF or a resident partnership firm, but not LLP. That is, limited liability partnerships cannot opt for presumptive taxation scheme. Also, non-residents can't opt for it. Second condition, you are into any business, say retail or wholesale trading, civil construction or any other business. Third, the turnover or gross receipts from your business for the last financial year is up to 2 crore. Having said that, there are certain persons who can't opt for this presumptive taxation scheme. First, professionals like lawyers, doctors, accountants, architects, engineers, because there is a separate presumptive taxation scheme for professionals under section 44 ADA. If you would like to know more about it, you may consider watching my earlier video, the link in the top right corner. Second, those who earn commission or brokerage, say real estate brokers, can't opt for it. Third, those who are into agency business, say LIC agents or any other insurance advisors, can't opt for presumptive taxation scheme. Then fourth, businesses who are into plying, hiring or leasing of trucks, that is those who are into goods transportation business, because there is a separate provision under section 44 AE. So to summarize, if you are a resident individual or a resident HUF or a resident partnership firm and you are into eligible business and don't fall in this exception category, and the turnover or the gross receipts from your business during the last financial year is up to 2 crore, then you can opt for this presumptive taxation scheme. Let's now see how is the profit computed. Whatever is your turnover or gross receipts from business, 6% of such turnover or gross receipts would be considered as deemed profit for the year. This 6% would be 8% for cash transactions. Say you are into cash sales, then instead of 6%, you need to declare 8% of your turnover or gross receipts as profit for the year. To understand this better, let's consider a scenario. Let's say your turnover for financial year 2021-22 is 150 lakh. Out of this, cash receipts are 25 lakh and non-cash receipts are 125 lakh. Now, for this cash receipts of 25 lakh, you need to declare 8% as profit. So, 8% of 25 lakh would be 2 lakh. For the remaining 125 lakh at 6%, so that would be 7.5 lakh. So, your total business income would be 9.5 lakh. Whatever profit that you so compute, you can't reduce any business expense from this profit. Say for example, the salary that you have paid to your staff during the financial year is 10 lakh. This 10 lakh can't be reduced from your business income of 9.5 lakh. But you will be able to avail certain deductions like deduction under section 80C, ADD, etc. Let's say your ELSS investment for the year is 1 lakh. So your deduction under section 80C would be 1 lakh. Let's assume you have paid a health insurance premium of 20k. So your deduction under section 80D would be 20k. If you would like to know more about these deductions, you may consider watching the playlist, the link in the top right corner. So your taxable business income would be 8.3 lakh, that is 9.5 lakh as reduced by 1.2 lakh, and you are required to pay income tax on this business income. We have just seen that there are two rates, that is 8% for cash transactions and 6% for non-cash transactions. Now what are these non-cash receipts? When your clients pay you in digital modes of payment, such transactions would be non-cash receipts to you. Now what are these digital modes of payment? First, it can be check or draft, then debit or credit card, net banking, IMPS, NEFT or RTGS, UPI, say Google Pay, Bheem, Paytm, etc. So when your clients make payment to you in these digital modes, such transactions would be non-cash receipts for you. To declare 6% on such non-cash receipts, you should have received this money from your customers either during the financial year or on or before the due date to file your income tax return. To understand this better, let's consider a scenario. For the financial year 2021-22, the last date to file your income tax return was 31st July 2022. So if you have received money from your customers in digital mode either during the financial year 2021-22 or on or before 31st July 2022, then you will be able to declare 6% of such receipts as profit for the year. To put it differently, if you don't receive this money from your clients within these due dates, then you will have to declare 8% of such turnover as the profit for the year and pay income tax accordingly. Let us now see what are the benefits if you opt for this presumptive taxation scheme. The objective of introduction of this scheme is to help small taxpayers. So the first benefit would be you don't have to maintain books of account under the Income Tax Act. But if you are required to maintain books of account under any other law, say for example, if you are a GST registered person, then you have to compulsorily maintain books of account under GST law. But you don't have to maintain books of account under the Income Tax Act. So if you have to maintain any additional documentation under the Income Tax Act, then such additional documentation would not be necessary when you opt for presumptive taxation scheme. Second benefit, no income tax audit. That is, you don't have to get your books audited by a chartered accountant. Third benefit, you don't have to pay advance tax in 4 installments during the financial year. Instead, you can make a single payment by 15th March of the financial year. If you would like to know more about advance tax, you may consider watching my earlier video, the link in the top right corner. Fourth benefit, no TDS or TCS provisions would be applicable to you. Usually, on certain expenses, you are required to deduct tax from your vendors. Say for example, if you pay consultancy charges to your accountant or transportation charges to your transporter, then you are required to deduct tax from these vendors when you cross certain threshold limit. Similarly, on certain transactions, you are required to collect tax at source, that is TCS. But if you opt for this presumptive taxation scheme, then this TDS and TCS provisions would not be applicable to you. So you don't have to deduct or collect tax at source and pay to the government, and thus no TDS or TCS returns are required to be filed once in a quarter, and this is a big relief. Fifth and the last benefit would be, it would be easy for you to file your income tax return, because if you opt for presumptive taxation scheme, then you need to use form ITR 4 instead of form ITR 3. ITR 3 is for businesses who don't opt for presumptive taxation scheme. It is a lengthy document and also time consuming. On the other hand, if you opt for presumptive taxation scheme, ITR 4 is a simplified form, so it would be easy for you to file your income tax return. So far, we have understood that there are two rates, that is 6% or 8% if you opt for presumptive taxation scheme. But what if you want to declare higher or lower profits? Is it possible to do so? First, higher profits. That is, say your profit is 10%, 15% and so on. You are free to declare higher profits and pay tax accordingly. No questions asked. What about lower taxes? Can you declare lower taxes? That is lower than this 6 or 8%. You can declare lower profits, but it has certain consequences. First, if you declare lower profits within 5 years since you have opted for this presumptive taxation scheme, then you will not be able to opt for this presumptive taxation scheme for next 5 years. Also, for these 5 years, you are required to maintain books of account and also get your books audited if your taxable income is more than the basic exemption limit of 2.5 lakh. This has to be done even if you declare 6% or 8% or higher profits during these 5 years. To understand this better, let's consider a scenario. Let's assume for the assessment year 2021-22, your turnover is 100 lakh and no cash transactions. And let's say you have opted for presumptive taxation scheme, so you have declared 6% of this turnover, that is 6 lakh as your business income. And let's also assume that this is the first year in which you have opted for presumptive taxation scheme. So for the next year, that is assessment year 2022-23, let's say your turnover was 110 lakh and again no cash transactions, but you had declared 5% of this turnover, that is 5.5 lakh as your business income. As you have declared lower profits within 5 years since you have opted for this scheme, for the next 5 years, starting from assessment year 2023-24 to assessment year 2027-28, you will not be able to opt for this presumptive taxation scheme. Also, if your taxable income during these 5 years is more than the basic exemption limit of 2.5 lakh, then you are required to maintain books of account and also get your books audited. Further, even for the year in which you have declared lower profits, that is in this scenario assessment year 2022-23, if your taxable income is more than the basic exemption limit, then you need to maintain books of account and also get your books audited. Let me now summarize. If you are a resident individual or a resident HUF or a resident partnership firm, and if you are into the eligible business and don't fall in the exception category, and the turnover or gross receipts from your business during the last financial year is up to 2 crore, then it is always beneficial for you to opt for this presumptive taxation scheme, because it's going to reduce your tax compliances. Therefore, you would be able to focus to a greater extent on the growth of your business. Hope you enjoyed this video. Thank you for watching.